All right, let's go.
We're good?
Yep, I think we're good.
Okay, so we're going to get started showing how to get started in QuickBooks, just the basic part of QuickBooks to get going. This way, when you start to get going in QuickBooks, you're able to learn and grow with your business and understand how your business is growing and where your money is coming from and where it is going. So we're able to track our business and make a more profitable business because we're able to track it and understand it. So these are the 7 steps to just get started. These are basic steps because QuickBooks is a great software, but it can seem a little bit overwhelming at times, a little bit complicated. So if we just get the basics down to understanding how it's working, then we can go from there to improve and be more specific to your business and learn how to help you track your business as well. So that way you can actually see your business and how it's succeeding in it. So to get started, we have to have our QuickBooks file open. When we do that, what we're going to do is go to File here, and if you click on File and New Company, this is the screen that we get. I recommend just doing the Express Start. Type in your name, so we're just going to do an example until X, Y, Z, and we're going to have it as an ink.
Now, Erin, let me jump in here. This is a specific desktop QuickBooks that you're working in as opposed to an online QuickBooks, right?
Yes, so this is actually Accounts Edition, which you guys won't, but it's the same setup. So everything's the same as that as far as that for you. There may be a few differences you'll see just because mine is the Accountants Edition, not the regular QuickBooks Pro. And this is for a PC, and it's version 2014. So there's a little bit of differences between the years. So those are going to be some of the things. Now, as far as the guidelines for a Mac and a PC and even online, the flow is very similar. There are some differences, but the flow of how you do things are going to be very similar in what I am showing you. So it should be very similar for that. Now, there may, like I said, some differences, but for the most part, it should be very similar for you. So you can at least find it in that area.
Okay, perfect.
The industry that we are doing is real estate. So I just recommend just do real estate broker and developer for everybody that's doing ordinary business, such as fix and flip. So then we are going to do, I'm going to say we're an S corporation. Right now, do you have employees? No, we don't have any employees for the moment, and even though you are considered an employee of your S Corp, that is a different topic, a different item. We don't need to worry about doing payroll in QuickBooks at this time. Then we click Continue, so we're just going to follow the prompts. It does want you to put in, so I'm just going to do my local zip code here, and I'll put in my phone number. So it knows. And then we go ahead and create our company. So we just set up our entity. It's creating this new file. And now we're going to get our entity, our QuickBooks, more organized and more specific to our business. What the real estate developing industry asks, it just gets more of a list of expenses and income accounts that are specific to that industry. But we need to add a few more. For example, if we look on our list, we need to have our business account. So it says here we've got all this. I'm going to go over here to company, and this is where you get to a little blueprint of my company, chart of account, and I like to make everything big. And if I go to account at the bottom left here and up to new, I'm going to click in, I want to add my bank account. So
all right, let me jump in here, and this is very, very important for everybody to understand, and I want to make sure that we get what the chart of accounts is. So, yeah. Erin, I know that you are great at this. I'm going to play like I don't know anything. The chart of accounts, why is that so important? It's kind of like the backbone of your QuickBooks, or the backbone even of your company, right?
This is right. That is correct. So what we're looking at, so I pulled up, these are the chart of accounts that I'm telling you about that are why we picked that industry. Is because with your chart of accounts, these are where every transaction that you have in your business, in your checking account, savings account, credit card, is going to go to an account. So you're going to go to one of these here.
So what you're really saying is every dollar that comes into my business or goes out of my business will be classified or charted as one of these accounts, like a bank service charge, or I'm spending money on my automobile, or, you know, if I make income, that's going to be, what is that, a commission income. So everything can be recorded or at least classed through one of these accounts.
Exactly. And this is why we're teaching you how to set up accounts, because I've got a list of basic ones that you for sure need. Like, you need to add your business bank account. You need to add your credit card. For fix and flips, we've got to add in our inventory accounts. But also, if you ever come across an expense that may not be in here, you also can learn how to add it. One that's not on here I can see is travel expense. So you may, obviously, probably at some point you're going to travel with your business, so you will need to later on add this. And this is how you do it. Now, there are other ways, but this is the main, easiest way to go about doing it.
Awesome.
All right. So again, I went just account and new here at the bottom, and that's where I got to this screen here. So with that screen, and I have bank as my account type. I want to make sure, and then I'm just going to say ABC checking is my bank account. You can add more things, but I'm just going to do save and close. Now my checking account is in there. Now on pop-up you get, it's going to ask if you want to do online services. This is something you can do in QuickBooks. I'm not going to show you this time because every bank and financial institution is a little bit different on how you can download the transactions from your bank account into your QuickBooks.
Now,
so that's something a little bit more specific later.
Okay, so this is something where they can actually download the physical, or not physical, but the electronic transactions going through their debit card, or, you know, even if they write a check, all of those can be downloaded and essentially synced right into QuickBooks.
Exactly. So it makes your life a lot easier. Now, at first, you may not have as big transactions, but as you get into buying more properties and having a whole lot, it makes things a lot easier to do that. So that is something I do recommend here later on, especially as you get your business going. Now, just to start off, this is just basic to get, learn how to input things. This is what I'm going to teach you. But like I said, later on, this is something you'll probably want to be specific in doing it. And every bank is a little bit different on how you download it. So where they have it and how you download it. And then the download's the same in QuickBooks. Where it's at in the bank is going to be a little bit different on their online services website.
Perfect.
So that's something just to be aware of. So for right now, we're not going to do that. So I'm just going to click no. But it does ask you that. And there are ways to add it back so you can do it. I'm going to add a credit card. So let's say we have our credit card. Because most people should have a credit card. And I do recommend a lot of times, even if you can't get a credit card under your business name because it's new, and I would recommend just use your personal credit card and use it 100% for this business. So it does make one of your personal credit cards to the business.
So what you're saying,
you're able to keep going.
So what you're saying is, if I have a personal credit card, I could actually just pay it off, or make it a zero balance, or even maybe not even make it a zero balance, but just use it exclusively for business, so that it all flows through, so we can keep track of the expenses that we pay for with the credit card.
Exactly, because the biggest thing you want to do in a business is you want to make sure we aren't piercing the corporate veil, is what they call it, meaning intermingling your business and your personal. We want to keep them separate as much as possible. So if you are able to use one credit card, and I do recommend paying it all off, getting it zero balance. If you can't, there are ways you can do that. But to at least have that credit card being designated 100% for business. Because a lot of times, even though you have a bank account, people want to use credit cards. It's a lot easier to do and to pay off. So I would recommend to do that. To at least if you can't get a business credit card, designate a personal credit card. And then you can go from there as far as using that for your business. That's one start to get going on that.
Excellent.
And a couple other accounts, and I have a list of other ones to do, but for right now I'm just going to show you a few more. Now, one where we are doing fix and flip. This accounting is a little bit different than other accountings you may have seen. For this accounting, because your properties are going to be considered inventory to you, just like if you went to a gas station or buying candy or something, that is inventory. That is how your properties are to you when you do fix and flips as an ordinary business. So what we need to do is all expenses associated with those properties, like designated specific for that property, is considered inventory as well. An inventory is an asset, meaning you own it until you sell it, and then it becomes an expense. And the expense that we use for inventory when you sell it is called cost of goods sold. So for the moment, when you buy the property, the first account you're going to do when you buy that property and it comes through on your bank account, we're going to click on other account types, and we're going to click on other current asset. And we are going to call this account inventory. And we are going to call inventory properties. So the purchase price of your property is going to go under this account. So that is one account to make sure you know. Now, you won't use that account only on the purchases. That is the only time you use it. Now, when you get flipping the property where you have improvement and you have utilities and repairs and you may have insurance you have to pay, property taxes, all costs specific to the property are going to be considered capitalized costs, which is also an asset account.
Whoa. Okay. So what you're saying is, if I am doing a lot of work to a property, and let's say I replace a bathroom or a kitchen, and I add value to the property, that money that I did the work with is kind of, it feels like an expense right now, but what you're saying is it's not an expense, it's actually adding to the value of that inventory, or, kind of adding to the value of that candy bar at the gas station, right?
Exactly. Because the reason why is, in accounting we have what we call the matching principle, meaning we want to match our expenses with our revenues that come in. So when we sell this property, that's when we're going to make this, all the costs you have with the property and the purchase of it, as an expense. So that way you get your net amount versus having one big sell price and one big expense in a year. You want them together. So that is why we keep it as an asset until it is sold.
So even utility bills, if I have to cut the grass or shovel the snow, even though those things don't really add value, it doesn't look like they add value, they're going to be recorded as what we call capitalized expenses, so that they add up until we sell that property.
Exactly. Anything specific to the property is going to be capitalized cost for that property. And that is the biggest thing. Now, it's hard to think that you normally would expense that, but you can't. Now, if it is just general business expenses, such as you have auto miles looking at property, or if you have advertising just for your business general. So any general business expenses, none for a property, those will be normally expensed. But if you have anything specific to that one property to be able to add value, to be able to sell it, that is going to be capitalized cost. Now,
maybe I'm jumping ahead here a little bit, but how in the world is it possible to keep track of those expenses, which are really capitalized assets, or we're looking at them as capital improvements, which is improving the value of the asset? How do we keep track of those properties individually? Are you going to be able to do this with QuickBooks?
So we're going to show you that here in just a moment. So keep on holding on tight for that, because we are going to track. So we have capitalized costs for all of your properties, but we are going to specifically track it for each property you have. And you are going to know how much you've spent in total for improving this property by each property. So
wow.
There's a couple ways to show you here in just a moment. I'm going to show you that.
Cool.
So let's try and add our capitalized costs here, because that is something we definitely need, so we can use it today. And I'm just going to type it in. Save and close. So we've got big name properties. Some other property or accounts that I told you on my list to add are going to be sales of the property. So when you sell the property, that's where your income goes. That's our cost of goods sold, like I talked about. And then also contributed capital. It's one, for some reason, QuickBooks does not have in there, but any time that you add money to the business, so personally contribute money into the business to keep it going, is contributed capital, and it's an equity account. So that is one you're going to need at some point, because I'm sure all of you had to put $100 into the bank account to get it going. That is considered contributed capital. So just kind of side note on that one. So here we go. We're going to, now to our next step is going to do what we call class tracking. Now there's two ways we're going to track all of these expenses. One is, big main one we're doing is class tracking. But inside QuickBooks, it shows as a whole. It shows your total income, your expenses, and all of your assets, liabilities, equity. But we're able to detail it even more and show it per property. So you can see how each property is doing by doing it as class tracking. So let me show you how to enable that. You're going to go to Edit. And down here to Preferences at the bottom. And then it's going to show up a pop-up. So I'm going to bring this up. We're going to click on Accounting. And then this little tab here called Company Preferences. Now, if you check this box as use class tracking for transactions, it's going to allow us to track each property. So that is how we're going to do this. And I recommend for every transaction you put into this QuickBooks file, so for your bank account, your credit card, everything has a class on it. Even if it's not for a specific property, we're going to just call it general, the general class.
Absolutely.
So that way you know what's going on.
I want to jump in here. We've got currently over 100 properties in 2 different companies that I take care of and am in charge of, and this one little feature is so important and has made my life so much easier to be able to figure out how much money went to which property, where, and when, and it really, really is a fantastic, awesome feature that QuickBooks has that you really can't get in a spreadsheet or wherever else. So I love it.
It will make your life easier.
Yes, absolutely. 100%.
Okay, so that's how we're going to enable it. So now I'm going to show you how to add transactions into your QuickBooks. Now we've got everything set up. Let's get started. So let's go to banking here. And we're going to add expenses or accounts, so debits or accounts, so as withdrawals, things like that, or checks. So we click on banking, write checks. It's going to have, it shows up, and it'll look just like a check. So it's going to be, you're going to fill it out like normal. So let's say you go to Home Depot. And it's going to add you, okay, well, we don't have this name in here. You can do a whole setup thing. I would just recommend QuickAdd because you guys aren't going to be doing invoicing or accounts payable stuff. Just do QuickAdd for right now. Okay? Then it's going to say, okay, well, what's my dollar amount? Let's say we spent $200 at Home Depot. It pulls it up. You can put in the memo that it was for 1, 2, 3, and then property, and it was supplies. Okay? Now, here's where we come to our thing which property is. Because it's supplies and it's specific to a property, we're going to call it capitalized cost. We're going to do a semicolon. Now here's something new. When you add a new account, and we're going to do what we call sub-accounts. Sub-accounts are what they are specific underneath that account. So we have capitalized costs as our main account. Now we're going to do a sub-account for each property. Another way of tracking your expenses per property. So if you do semicolon, 1, 2, 3 property, and I always just do the street address of whatever the property is. It's easy because you may have some in the same city, so it's just easier to use the address. Tap, and it's going to say, whoa, this is a new account. We don't know this. So we're going to say, yeah, we want to set it up. And you're going to get a pop-up and drive over. It's say, well, what type of account? It already does it as an other current asset because it knows it's recognized with capitalized costs. Perfect. You don't have to change ever anything there. And then it's going to have another pop-up, just like you were when you set the account. And it says, okay, here's the name of it, because you already added that. And it says it's a sub-account of capitalized costs. Everything looks great. Save and close. So it's easy to do, and you only have to do it once. So now that it's in there, it's already an account. We don't have to go back and keep adding it.
So, wow. So this is very similar to class tracking, keeping track of income and expenses per property, but now we're keeping track of the actual asset as the asset value grows or the amount of money that we've put into the property grows, called capitalized costs. That is tracked through having sub-accounts under capitalized costs.
Exactly. So you're able, this is another way of tracking it, but it's going to be a little bit more specific to this account. So that is why we want to do that.
Okay, so this is really, and we're going to get into this, in later videos, but this is really about the balance sheet and the capitalized costs, and the class tracking is about the income statement or the income and expenses of the business, correct?
Exactly. That is correct. And we actually can do class tracking on the balance sheet, so there's multiple ways, but that is the more specific and standard way. Is class tracking the income statement or profit and losses you may see, and sub-accounts like this is going to be more specific to the balance sheet. So that is how we see it. Now, you can put another memo in here too, but we are also going to add our class here. So, like we talked about, our class tracking. Here's how you add a class. We're going to type it in 1, 2, 3 property. So once again, go by the street address of the property. Type it in. You can either tab or hit enter. And then it'll say, oh, we don't know this class. You can do a quick add. You can do this whole setup. I just do a quick add. Easy. It's now all set up. So you have your first transaction in here.
Wait. Can I put my 2 cents in about keeping memos?
Put your 2 cents in.
Okay. Recommendation from Justin here, always put more information in than less. So what I always do is I always just copy the memo from the actual transaction that's happening and copy it into the memo line in the account, because this is what's going to show up on your when you print off a statement or when you're looking at an income statement or balance sheet. This memo is going to show up there. So having more information about what supplies, let's say you bought paint and carpeting, or you bought some tools or whatever, those, if you have more information rather than less, at the end of the year, you are going to be much happier than having no information. So take it from me, when we started, doing multiple properties every single month, this was a really, really useful habit to have gotten into. So please start at the beginning.
And it'll make your accountant happy too. Because when we're going through and trying to figure out what things are, and if it's in the wrong account, maybe you made a mistake, we can look and say, oh, okay, this is where it should go, or this is what it is. So we're not guessing, and then you look and say, I have no idea. That was so long ago, I don't know.
Absolutely.
Do it now, not later. Okay, so I'm just going to click Save and Close. There's my first transaction. So it is in there. I'm going to now, so that's how you do it, just writing a check or an auto withdrawal, one of those items, that is how you do it. Now, we're going to receive our first amount of income. So if we go to banking here at the top, make deposit, we are going to do, this is how you're going to put in. Now here's our date, similar thing. So a lot of times you're going to, you can put, you bought it from John, or you received the property that you sold, John Smith bought it. So that's who you're receiving this from, this income. He's obviously not in there. We're going to do a quick add again. Now, anybody you receive income from is a customer to you. Okay? So just like you're selling your inventory, he's a customer. So very similar on that standpoint. So we want to keep that there. Then we're going to say, okay, well, what account is this from? It is from, we have this right. So, sales, property. And here's how another way to add. So very similar to our setup that we did as our sub account. We click on income because that is income to us. Continue. Everything looks good. Even close. So there's multiple ways to add accounts into Quickbooks. There's another one. So there's our property, our income. Now I'm going to say, okay, this is for 1, 2, 3 property. This is our gross sales price. And I am going to tell you this. When you sell a property, you're actually going to have a whole big detail thing on this sheet, because you're going to have selling expenses. You're going to have to sell the inventories that we got to move over. So this is very basic. It will get a little more complicated, which you'll learn how to do, and it's easier to do once you figure it out. But just to know, this is a basic way to add income. There is more detail when you do it later. Now you can put a check number number of whatever the check was. If it came through, you could put the payment method. You can say it's cash or a check or credit card or American Express that. So I'm going to just go with a check. And then here's my class. And you for sure want to make sure you're doing your class on this. And even if you didn't put a class on here so you know, Quickbooks is going to remind you saying, hey, you didn't put a class on this. Are you sure? So it does send you a reminder. And then we're going to put our amount. We're going to say we sell this property for $30,000.